Okay, story time. Thursday afternoon. The jobs report lands, the Dow rips to a record, and somewhere in the middle of all that, the market quietly decides the artificial intelligence boom is over. Chip stocks get dumped. Hard, and one company gets it worse than anybody. One stock, down 14% in a single day, worst on the entire board, and the whole internet does the thing, told you, bubbles popping, get out of chips, everyone agrees, which, if you've been here a while, is usually the tell. Except, here's the part almost nobody bothered to check. That exact company, the one everyone dumped as proof the boom is dead, just grew its revenue 87%. In 1 year, that is not what dying looks like. The company is Teradyne. They don't make the chips, they make the machines that test them. Every advanced chip on Earth has to pass through gear like theirs before it ships. $1.28 billion last quarter, up 87%, 70% of it artificial intelligence, and their memory testing business just set an all-time record. So, down 14. Growing 87, somebody's wrong. Here's the mechanism, the actual story under the story. Chips are getting harder to build. Stacked memory, advanced packaging, denser designs every generation. And the harder a chip is to build, the more testing every single one needs. Even if the world stops making more chips, each chip needs more checking. Teradyne sells the checking. The market sold a complexity story like it was a demand story. That's the mistake. And it gets better. Why did chips sell off at all? Because one analyst asked whether the cloud giants can keep spending on artificial intelligence without proving it pays off. Okay, and what does proving it take? Testing, verification, inspection, the panic is the tailwind. Now the honest part, because I'm not selling you a dip. This stock is up about 300% in a year. Test equipment is brutally cyclical, orders can vanish in a quarter. And 70% of revenue tied to artificial intelligence cuts both ways if the spending truly slows. It absolutely can fall. The point is that on Thursday, it fell for the wrong reason. So here's the read, and it's bigger than one stock. When the index and its engine disagree, believe the engine. The index sold the whole chip complex as one finished trade. The engine, the company that grades the build-out, grew 87%. What proves us wrong? The test orders or the guidance get cut. Until then, sold 14. Growing 87. That's the asymmetry. I'm Frankie, and this is the asymmetric signal. One contrarian read a day. If you want the full market picture, Earl's Daily Brief is linked below. Subscribe.